Maybe just starting with a quick review of what we're here to talk about. The session for this round is the North American airports and the stark choices that are being faced. There's the status quo, but we'd like to examine the ideas of private capital to a larger degree in North American airports. And I'll qualify that by saying Canada and the US. We recognize our friends in Mexico are North America as well, but they have a lot more maturity when it comes to airport concessions and private sector involvement. So without further ado, I would like to introduce my guests for this session. We have with us Craig Richmond. He's the former Vancouver Airport CEO and also has done a lot of work abroad, which I'll let Craig give a little bit more of an introduction to that background as well. And we have David-Olivier Tarac from ADP, and he's got a interesting story to tell in the places he's lived over the course of his career. So I'll start, or before I hand it over to Craig to give himself a bit more of a formal introduction. I'm your host. My name is Curtis Grad. I'm the President CEO of Modalis, based here in Vancouver. And you've been hearing from our team throughout this 3-day session with a various number of sessions, and we've got a few more to go, which I'll review at the end of this this discussion. So Craig, maybe just a little bit further background from you, and then we'll get David-Olivier to introduce himself.
Sure. Thanks, Curtis. Great to be here. In the airport industry, I started off in Vancouver, and I was lucky enough to move to, at the time, Vancouver Airport Services. I think a lot of people at GAD have been at YVRAS or subsequently Vantage. And then I spent time in the Bahamas, lots of time working on deals around the world, some time in Chicago, was in northern UK, in Liverpool, and a couple of other airports up there, and then Cyprus, and then back to YVR. So the interesting thing about my career is I think I have hit every kind of governance model, from fully privatized to government to the privatized model in Canada to the semi-privatized to the trying to privatize. So I've seen a lot of different models over the past 25 years.
Absolutely. And we always kept in touch with each other when we were bouncing around the globe, but we never ended up in the same place at the same time. So
probably a good thing, Curtis.
Yeah, it might be a little dangerous. So David, maybe just a quick roundup of your background, and then
Sure.
We'll get in.
Sure, absolutely. I'm glad to be here. Thanks for having us. It's great. It's always a great and renewed pleasure to attend a session you host. So I'm David-Olivier Tarac. I'm managing director of Group ADP across US and LATAM market. I've been with ADP for the last, I think, 12 years. I've known a lot of geographies like Craig. I've been living in France, in Turkey, in the US. I think I'm probably among the few that have witnessed all types of crisis in the airport industry, from obviously the most recent one, but also had the privilege of seeing very close, while my kids were actually born, social unrest, a coup, an attempted coup back in Turkey. So I know how this industry can be affected by very short-term crisis, but also how this industry is really geared towards growth and ultimately bounces back pretty robustly. And so I'm hopeful we will all cross the ocean and come back to a new normal. I wouldn't say a normal, but a new normal. And it will be interesting to have a discussion on what that could be. But so I'm extremely enthusiastic. I've been working in several positions, as CFO, a deputy CFO of the group, running deals and transactions in the airport space. So thank you again for having us.
Okay. So obviously the session here is focused on the US market and the Canadian viewpoint, but we could be having a global discussion if we really had the time. But I think all these things become relevant when we talk about the application of some of these ideas to the US and Canadian market. So what I'd like to suggest is that we take some time to talk about the private sector participation in the U.S. market and what that track record has looked like. And maybe David-Olivier, you can start with your views on that, and then we can move into a broader discussion.
Yeah. So, I mean, as an element of context, I mean, the past year has been. Well, let me start by the journey of ADP. As you know, ADP is a global airport operator. We operate 27 airports around the world. We recently closed, while we were in the pandemic, a big transaction buying out a co-controlling stake into GMR. And about 3 years ago, we decided to set up a company in the US to try to chase opportunities, because we were seeing the US market as a very large market, though we're still with untapped opportunities as far as P3 model was concerned, as the airport industry is mostly owned by public interest, contrary to other regions in the world. So about 3 years ago, we decided to set up a company here to position ourselves and tackle opportunities here. And our efforts in the US market has been probably for the last 10 years. We had been involved in the past on Chicago Midway and so on. So as an element of context, this year is really a horrendous year. I mean, we're seeing PAX off back in April, 95%. Now we are closer to 65%, but with the corporate travel, for instance, not coming back to normal level, and so it's mostly the recovery. The small recovery is only driven by touristic flows. We've seen massive capacity cuts by airlines, and this crisis, and contrary to the other crises like 9/11 or SARS, is affecting all regions across the world. The crisis is deeper in terms of impact, and probably longer in terms of effect. We were not even considering to have a recovery before a few years from now. And I think the most difficult issue here we are having is the trust of passenger in the airport mode, transportation mode, is severely affected. I mean, if you don't trust that you can fly in a safe environment in the plane or in the airport, you're not going to bring your family. And so I think all our duties right now is how can we restore that level of trust. So the consequence of that drastic impact on traffic, and we'll see if the effect will be long lasting, is U.S. airport have been under a severe financial stress, despite the CARES Act money flowing into the sector. We've seen obviously billions of dollars flowing into airports. Of course, the biggest airport taking the lion's share of that. But fundamentally, I think despite the CARES Act, we still have a cap in terms of AIP funding. So we have a cap in terms of how much the federal government is willing to invest into airside infrastructures. The passenger facility charges that used to be in the past used to fund terminal projects like the PFCs are, as you know, capped on a per passenger basis, and therefore when you don't have passenger, you don't have revenue. And the CARES Act money was really directed towards more operational expenditures and not investment. Similarly, I think a lot of state and local governments are facing very, very drastic fiscal challenges due to loss of taxpayer money, and that I think could pave the way towards more thinking of local authorities toward asset recycling deals, where they will have to make choices in terms of how they allocate their assets and how to fund social infrastructures when you don't have enough money to fund those investments. I think at some point they will realize that they have a huge amount of cash sitting on their balance sheet, and also some risk, by the way, because what this crisis is telling us is the airport industry or the airline industry is not as safe as what we thought it was. And so I think a lot of local municipalities are considering that now there are certain risks embedded in their balance sheets, and that they may consider further transactions. So I think the combination of both the constraints on public finance of certain local and state governments, as well as the constraints on U.S. airports, is going to drive at some point more P3s opportunities in the future. And in the meantime, the difficulty obviously is that we don't exactly know what the path to recovery will be. It's very uncertain. We know how fast the sector will rebound. So that makes obviously a transaction nowadays on the P3 side a little bit difficult for investors. A P3 is definitely based on the fact that you have a certain degree of predictability, and it's very difficult to put a value on assets when you have an uncertain and volatile environment. But I think in the long run, we will see more P3s, and especially in the US market, because the capital improvement needs remain fundamentally. Some US airports will have to cope with obsolescence, with the necessity to invest in enhanced customer experience. They will have to invest in transformation operations to adapt the infrastructures and the facility to new traffic patterns, where social distancing is a requirement, where maybe access to airports will change. I mean, from public transportation towards more usage of cars. So I think we'll see a lot of needs to be fulfilled, and with a lack of, or with some cash shortfall on the airport side, that should drive, I think, more demand for P3 types of transaction. And I think what we've seen also in the recent past is some airports taking advantage of the crisis and the lower traffic levels to actually engage themselves into, or to expedite some construction work. We've seen, for instance, DFW being very active. We're advising as ADP, DFW and their master planning exercise and the reconfiguration of American Airlines hub in Dallas. But we've seen Denver being also more active over the past few weeks towards what can we do in the short run, and how can we benefit from the current low traffic situation to reconfigure the way the airport is working. So I think we'll see probably going forward more transactions, and that is really driven by the lack of funding, and by still a lot of capital improvements that are needed. I think again, the necessity to enhance the user experience, I think, remains, with a focus on creating destination terminals that incorporate attractive, high quality elements, updating bathroom, installing noise dampering measures, creating a localized with a lot of sense of place retail experience, making queuing more efficient and safe in this health difficult situation. Transformation of operations. I mean, investing in digitalization, smart technologies to streamline processes, to reduce the cost per enplanement will be a requirement, because the airlines are under so much pressure. They will definitely need further investment to bring the CPE per enplanement down, and to have airports streamline their operations. And so we'll see, I think, a lot more investment onto digital automation, self-check-in, security, and so on. And again, I think one of the challenges airports are facing right now is really to improve the delivery of project, to prioritize, to reevaluate the near-term project pipeline and accelerate projects that take advantage of the reduced passenger loads and that can really enhance the long-term competitiveness of airports. So I think all in all, I'm a bit uncertain in the short run, because prices are low, because there is a lot of uncertainty. But I think over in the short run, but in the long run, I think we'll see more P3s going on due to the financial pressure. And so I think the recent changes in the FAA Reauthorization Act in 2018 is definitely going in the right direction. There were several impediments. The number of slots were limited. Now you can even fund pre-studies by receiving some FAA money to fund some of your advisors when you're a local municipality and you want to engage yourself into a pilot program type of privatization. But it's true that US is still lagging other airports, so I think there are still some barriers. So I see a lot of opportunities in this market, and this is what drove us to set up this company 3 years ago. But there are still a lot of barriers. One of the barriers, which I think is key, is definitely the volatile context. Second, probably the availability of liquidity, cheap liquidity on the market. I mean, any airport, any municipality has access to the municipal bond market, which is deep in terms of liquidity, and even the infrastructure fund have a lot of money to invest. And so it's not always a very easy discussions with local authorities to justify the merit and the advantage of a P3 against the traditional financing of airports, because they really have access to cheap money. But I think and we've seen also some barriers on the political side. We've seen a lot of debates around control and ourselves. I think in this crisis we're also trying to rebalance our relationship and to rebalance the contractual relationship we have with authorities. Towards more risk-sharing mechanism or force majeure. There is a big uncertainty, obviously, on the strength of user agreements, and some airlines may go simply bust or bankrupt in the near future. And I think the last barrier we have is the US market is a bit NIMBY in a way. There's a lack of success stories that could justify to make the move. And I think some local authorities are waiting to see. There's a kind of first mover disadvantage, but I think as soon as we will see some key success stories, I think that will trigger something and catalyze something. So I think all in all, I'm hopeful that there will be huge opportunities. Probably it will materialize slowly, but there are still some barriers to overcome.
Yeah. Well, and certainly the demand is there, as you've said, David-Olivier, but it's those cautionary tales that are out there. And I think, we look back at some of the great successes, and LaGuardia is a prime example, but there's also these sort of unfortunate situations out there that happened out of circumstance, and I'm thinking about Midway, Denver, and most recently St. Louis. And Craig, you were involved in the Midway project years ago, and timing is everything. But what would the view of the sector look like if that project succeeded? And interesting to hear your perspective on that.
Well, Midway actually, excuse me, had the traffic that we thought it would over the time, and it's just trying to finance during the middle of the Great Recession was very difficult, and especially given the nature of it's a first time in the States. But I think still Midway has amazing potential, and of course Vantage is back in there with the commercial concession agreement. So, should I go on to Canada?
Yes, please.
So I just want to caveat, I'm not running an airport, so all of these, my thoughts here are a compendium, if you will, of canvassing my previous colleagues as they're running across Canada. And I noticed in the, one of the things that says status quo, what is the status quo right now? I mean, I just saw that Qantas received a brand new 787 yesterday and put it immediately into storage. So it's a strange world that we're in for the moment. If anything, I think Canada is doing even a little bit worse in the airport sector than in the States, because we don't have the huge domestic traffic, that the United States has. And as David said, 95% drop back in March and April. It's coming back a little bit. And airports need to remain open. And as everybody here knows, a snow-covered runway needs to be cleared, whether a 2, 10, or 35 aircraft, using it in an hour. And so we're kind of on the opposite side of the economies of scale here, where a lot of businesses would not stay open if there were a 95% drop, and airports have to stay open. So what have they done in Canada? Of course, as everybody, cut costs drastically, laying off staff and management, between 30 to 40% of their staff and management. And unlike the US, there has not been as much help for the sector. Yes, the airports are eligible for the CERB, which is a salary top-up, but no care program, as it were, for airports or airlines in Canada. The larger airports got a break on rent, but because rent is based on gross revenue, that turned out to be, pretty small potatoes. And as I speak, there are talks going on, very intense talks this week between airlines and airports on some kind of care program in Canada. I worry about the strings that are attached and if they will make the help palatable. So I think airports in Canada, major and say that the top 30, 40 airports are in the crouch, planning, working on new ways to test passengers and restore confidence, as David said, but really in financial terms, trying to survive the next couple of years. So no surprise, part of that survival has been working on their terms with creditors and lenders and borrowing where possible. And the difference in Canada is that money is still actually quite available. Cheap money is there. So airports have literally been borrowing hundreds of millions of dollars, not for capital, but for operating. It's the right move, but nobody likes it, of course. It's like using your credit card for groceries and not paying it off. But you have to do what you have to do. That's unfortunate. But what it does, of course, is add to the total debt load of these airport authorities without a corresponding asset. Again, not being critical, it is the right move at this time. You have to do what you have to do. But of course, any corporatization of major Canadian airports, and I use that term deliberately because, of course, Canadian airports were privatized, but any corporatization would include this new debt, which is being loaded up. So that would either drop the net sale price or the appeal to a buyer. The good news is the airports are amazingly good long-term assets. They're now overcapitalized, if you will, with very modern terminals and skeleton staff. So it's weird. It's almost like they've gone through a corporatization, because that's normally what we would do, right? Go in there and restructure the staff, and they don't need to be capitalized. So I'm sure, like every government in the world, the Canadian government is thinking about, should we dispose of these assets? The question of who owns the assets, because clearly under the leases for the major airports, the airport owns the land, or the government owns the land, but the airport owns the stuff, the terminals, etc., for the next several decades. So that question still has to be answered. But I'm pretty sure these conversations are occurring in boardrooms and in Ottawa, even if at a very preliminary level. So there's a lot of hurdles remaining. I would point out two would be that there's no regulation in place for this, and there would have to be a lot of regulation, because airports, there's big gaps, in any kind of sale or regulation, how an airport would have to be operated. But I think these conversations are occurring. And I would just say that it is amazing to me how the bond market has still responded to the major airports and saying, well, we believe in the long-term viability, and that the last several issuings have been oversubscribed, even during this pandemic. So that's good news, because it shows that the bond market really believes in the long-term viability of the airports up here. The bad news, of course, is, as I said, is borrowing just to survive.
Yeah, that's a sort of resounding story that I've been hearing from a lot of the CEOs I've been talking to over the last couple of weeks as well, in Canada particularly. And I guess that unique Canadian model, Craig, the not-for-profit model, and I'm not sure that everybody's completely familiar with it, but as a non-share capital company, they've got the ability to raise their funds, capital funds, through various forms of borrowing, including bonds. But I know that some of them are struggling, and not only just for their operating costs, but they're heavily leveraged for a lot of big capital programs that were developed. And we'll avoid naming names, but we know there's a few airports that built a lot of capital, and they're in a pinch. Do you see this being a catalyst for them to consider some sort of private sector participation, or trying to restructure and corporatize these some of these airport authorities so that they can bring that capital in? I'm thinking like the pension funds or some other sort of benign capital, or do you think they're going to just ride it out and borrow and pay back later?
Well, it's funny because a year ago I would have said, well, I don't see an opening for private capital when airports can get hundreds of millions in the 3 to 4% range, right? I mean, and that is what they're still getting. But that times change, and these times are bizarre, and so I can see that airports may think about, is it possible? And I have heard over the past couple of days discussions about a Copenhagen model, if you will, say going back to the early 90s, where there might be a split of some kind. We're in a period where all bets are off, and I think that airport authorities and their boards will be saying, how much pure debt do we want to take on just to have to pay back operating costs in the future? So I think, honestly, I would have said I don't see it likely, and I said it several years ago. I don't see it. I don't understand the reason for it, and I thought that, okay, if interest rates start to climb and money gets expensive, okay, maybe that's when there's an opening for private equity. But maybe just because of the catastrophic nature, and I don't use that word lightly, it has been a catastrophe for airports in Canada and around the world. All bets, I think, are now off in terms of future structure of the airport industry in Canada. As I said, as we speak, very deep negotiations going on with the government about some kind of care-like act for the airports and airlines in Canada. Don't know where that goes, but depending on how that goes, and even depending on what those conversations are like, I think it could really change the structure of airports.
Yeah, a couple of comments, Curtis, if you allow me, on this. If I look at the U.S. market, it's true that there has been only a very, very few full airport privatization so far. I mean, and obviously the first one that comes top of mind is San Juan, but that's probably the only one big privatization. And I'm not expecting that in the future we'll see a lot of those full airport privatization, because it raises a lot of questions, difficult questions, around what's the strategic value of an airport for a local authority. And it's very difficult for an authority to relinquish the full control over an asset. Having said that, I think what you were mentioning on the dual structure, where by structuring adequately the transaction with some private capital and public capital, I mean, typically the sort of model we've seen, for instance, on the French regional airports, that could be a way to structure a good alignment of interest between the local public authorities and the private sector, and to gain the best of both worlds. So that's one possibility that we may see. I think in the US, what we may see when we talk about P3, there is also a continuum of what a P3 can be. It doesn't necessarily have to be a full outright sale of control over the entire asset airport platform, but you can also privatize some pieces of the airport. We've seen, obviously, the traditional model where airlines are investing in terminals, and in a way, it's a form of P3s. But we've seen recently some transaction on some pieces of the business, like cargo, warehouse, like parking, like obviously what happened in LaGuardia with the Central Midfield Terminal transaction. So I think we may see probably less full airport privatization in the US, and more smaller scale, and really transaction targeted towards specific developments going forward, where the private sector can be very helpful in terms of bringing performance, speed, in terms of delivery, and managing the risk, whereas not raising big concerns over the ownership of the land, the ownership of the assets, and the control of over the entire airport asset. So I think that we will see probably more hybrid types of transactions going forward in the US. And I think the key question, but I think it applies the same in Canada. The key question is what is the case for change? Why do we want to move from a public ownership towards a private ownership? What are the objectives? And considering these objectives, is a P3 structure instead of a traditional project delivery the right model? Traditional project delivery in terms of procurement, in terms of financing. I don't think it's really, the answer is obvious. It doesn't necessarily apply. And the fact that Canadian airports are, despite of being public, are, I think, of an extremely good quality in terms of investment and capacity, I think raises a debate that needs to be that we need to have collectively on the merits of a P3. But I think as long as we see P3 transaction as just a financially driven sort of transaction, the market will fail, because a P3 is not about about raising cheap money. You have to compare the financial premium you pay, because you have to serve a decent return to private investors, compared to the additional operational and commercial performance and the risk being shed out of the structure. So I think it's a balance that we need to work on, and the authorities, the local authorities, and the public authorities needs to work on that case for change and justifying the reason to use a P3.
And talking about this case for change, and I'll start by talking about Canada. I think the compelling case for change is coming from the federal government, who has, they really had to open up the public treasury to deal with this crisis, and I'm sure they're looking at every option and where they can finance and restructure, into this new economy. It's going to be a long time before that tax revenue comes back to replace what's been invested in the recovery. And I can see that airports, as they look back in 2015, may be a very attractive source for them to try to unlock the capital that is in those airports that they own. The question is whether there's the political will, and with a tenuous minority government in place, probably not the ideal time. But in the case of Canada back in 2015, that was the exact idea, was the asset recycling concept. But you have a single decision maker on the ownership side at the federal government level in Canada, whereas with our situation in the US, every one of those airports is, as we've talked about this before, David-Olivier, it might as well be another country. St. Louis is different than Denver. Denver is different than New York. And even in New York, each one of those airports, even though they may be under a Port Authority model, they often have different decision points. So maybe just back to Craig, with the provincial or the federal government looking at this back in 2015 and where they are today in terms of their minority government, do you think there's a likelihood of any sort of serious look at their divestiture of stake, or do you think this is just something that's going to have to wait until there's a different sort of political situation?
I just know I've got a question. Are you, you were opposed to it before, are you now saying it's a good idea? This is a very complicated answer. I mean, I'm opposed to it if it's just to bring in private capital, because again, airports didn't need the money, and still can borrow in Canada at extremely low rates. And another reason you privatize is because you want the expertise, and Canadian airports are very well thought of, and I think they have a lot of expertise. And so it didn't seem to be there was no compelling case for it. It was just going to drive costs up, I think, in the past. The reason I'm sitting here going, I'm not sure now, is because there are airports that are probably I wouldn't say in financial trouble, but really looking at their long-term model. And as we were talking about before, our industry has been growing in leaps and bounds. And the past 10 years have been incredible. And now we have to take a big collective, step back and say, how do we run in a low growth, model, and what is the model going forward? And I think we're all sitting here wondering. Nobody expected to be doing a GAD conference like this. I think of all the time and the money and time I've flown to Ottawa from Vancouver, and I think, I wouldn't be doing that again if we could do this kind of conference. I mean, it's going to be a different world, and so I remain a little bit skeptical because there's so much infrastructure money available to airports, so many. The bond market's still very kind to airports in Canada, but I also recognize it is a different world, and not every airport in Canada is in the same situation. So even some of the mid-size airports might be thinking about, well, is there a different way to structure right now? Because this just continuously loading up on debt doesn't seem to be, a wise move. So. Interestingly, I think, like I said, the airports remain very, very attractive long-term assets. If they're certainly not as attractive right now as they would have been 3 years ago in terms of a sale price. The question does remain: how do you sell an airport in Canada? As I said, and there are other caveats as well. At the airport I used to run now, there's a serious interest in there from the First Nations, so they would have to be accounted for across the country. So not quite as simple as some people might like to think. And of course, as I said, how do you set a price? Who are you selling from? And those kind of questions still remain, very, very interesting. Also, the regulatory environment. You have to build an entire set of regulations. So again, this isn't something that is going to happen in the next year or two, but I'm certain there are conversations going on. So I would say that my opposition is dulled somewhat by these extremely difficult circumstances we're in that are going to last for the next couple of years.
And interestingly enough, that was exactly the nature of Jody's question, Jody Alcorn. So thanks for addressing that question in advance. And I do believe, in the U.S., you've got airports that are, again, locally owned and operated by their local governments, David-Olivier, but it's the same issue is, if you're a county or a city and you've got the same challenges facing you, same drivers, just different situation. But you talked earlier about there's demand and there is opportunity, but there are these barriers and there are these cautionary tales we talked about earlier. But how do you see the attitude towards private sector involvement in airports, whether it's individual terminals versus entire airports? But how do you see the U.S. market becoming more comfortable with the private sector involvement, given some of these cautionary tales out there?
I think it's all, when you look at the recent setbacks, I mean, the St. Louis, Midway, Austin, recent transactions, and despite the crisis, some positive news, there are some certain developments, for instance, in Florida, recent development where we've seen certain local authorities taking steps towards privatizing some airports in Florida, or at least building a public-private partnership. I think I'm hopeful. When the transaction has failed, like St. Louis or Austin, it all stemmed from a lack of key stakeholders engagement and key stakeholder management. Because when we look back towards, for instance, the St. Louis deal, I think having a case for change and knowing in advance what would be the use of proceeds, I mean, it's a key question for the population and for the public opinion. So, as you said, rightly said, the decentralization of the U.S. will remain. It's a fact. Airports are owned by local authorities, and you have to cope with that reality. But I don't think per se it's a question of knowing whether P3 is a superior model. I think a P3 is just a tool to address a certain situation. And as you said, the Port Authority of New York has adopted, for instance, very different perspective in LaGuardia compared to, for instance, what they were planning to do in Newark. So each case is a different case. Each case, you have certain risks, you have certain project delivery, certain objectives. The LaGuardia case, for instance, was a case where the technical complexity of the project delivery was huge because it was a massive refurbishment of the infrastructure while keeping the airport operational and open. And so that was technically very complex, and the Port Authority rightly probably didn't feel it was well equipped to manage those delivery risks. in terms of cost, in terms of managing the planning and the construction risk. Whereas in a brand new terminal in Newark, which is a more traditional type of project, they were much more comfortable with a D&B, a design and build model delivery. So I think each case will be very specific. What I've seen in the past when projects have failed, it was really because there was a misalignment of interest or objectives which were not clear and which were a bit partisan in a way. The St. Louis transaction has been promoted by a group of politically driven players, and I think there was not enough motivations that were consensual motivations to do a transaction. And so at some point, if you lack of that key stakeholders engagement, I think there is a reality. And even us as investors, we would not want to engage huge amount of money into a situation where we are not sure that there is a local support, because we are not just simply doing a transaction at a certain point in time. We are committing for 40 years. And so when we appreciate the merits of a project, we really pay a lot of attention to whether or not the local authorities are committed to the process, whether or not there is a consensus, and how we will be able to build a consensus around private sector involvement, and how we can build on local communities and build local communities engagement before committing a lot of money. So I think the difficulties you mentioned around the political sensitiveness, the necessity to manage thousands of situations across the US, because when you have done one P3, you've done one P3, I think will remain. But given the constraints that we are seeing in terms of public finance imbalance and so on, I'm hopeful that certain airport authorities will really consider how to rebalance their portfolio, because the needs remain in terms of education, in terms of security, in terms of even funding economic recovery, and the money has to come from somewhere. And I don't think the money will come from additional layers of debt, because some municipalities are already fully loaded with debt, in certain cases with very highly leveraged. So I think it will have to come from more asset recycling going forward. And I think I've seen in the past few weeks a certain change of tone, and some local authorities being more amenable, at least to start a conversation.
Okay, great. Well, we're running to the end of our time here, so I'm going to give Craig his sort of closing arguments for where he sees the change or the recovery happening in both the Canadian and U.S. markets, and if we do have any questions at the end, any further ones, we'll address those. But Craig, maybe your closing thoughts, please.
Well, I would just reiterate, I think Canada is, if anything, in a slightly worse position, no CARE Act, that kind of thing, than the States. It's survival mode for the next year or two, but certainly I think those conversations are occurring. Again, I personally remain a little bit skeptical, because the model has worked very well here. And but I would say that because, as David said, the federal government will be looking for any source of revenue it can find. It's not impossible to imagine in Canada.
Yeah, well, certainly they say desperate times call for desperate measures, and necessity is the mother of invention, if we use a few more cliches. But at the end of it, the airport and the airline industry will hopefully be stronger through the things that they've had to do, and become more efficient, and maybe a little more cautious. I think we all thought, you talked about these traffic forecasts that we talked about yesterday that were sort of 3% to infinity. Everybody thought, we'd continue to rise and grow forever. But I think the reality is that we need to be planning that every 10 years there's going to be some sort of financial shock, that trend line that's nicely going like this is always going to have one of those. And maybe we need to be a little bit more conservative in our assumptions going forward. But I'm a firm believer that the industry will bounce back. It will bounce back hard. There's a huge pent-up demand to travel, and when the time is right, we'll be back in the air. And I think the three of us will be the first ones on board. So I do thank you for your time. I know that we're we're butting up against one of the other main stage sessions, so why don't we conclude it here? And gentlemen, it was a pleasure as always, and I look forward to not this virtual stuff in the not too distant future, but to see you in person.
Thank you.
Thanks. Thank you.
Okay. And thanks for the audience for listening in, and we'll talk to you all soon. Bye for now.